Thank you for joining me. I'm Alex, and I would like to talk to you about Netflix. So, Netflix does streaming content like movies, TV shows. They actually acquired the rights for some pretty old stuff, but they have a lot of TV shows on there. They produce their own content, which is important. And they were the first big player on this market. And they used to send DVDs out, for people to watch, like in physical form, which is amazing. So price currently $270.72. Market cap is $119 billion, which gives them a PE of 107. So dividend yield is zero, payout ratio is also zero because they're still trying to grow. They're still trying to be the number one. They reinvest pretty much all the money they have into content, which again is important. Revenue currently $15.8 billion, which is up 40% from the previous year. Earnings $1.2 billion, which is up 100% from the previous year. And total assets $26 billion, total liabilities $21 billion, and total stockholders' equity is up 50% from the previous year, which is $5.2 billion. So, risk factors, and everyone's talking about this, is that there's many other streaming services out now. Now, there's Disney Plus that just came out. There's Apple Plus, I think. There's Hulu, there's Vudu, there's Amazon Prime Video, and I think I might be forgetting several. So, why does that matter, and what happens next is kind of the big problem. And a lot of people are very pessimistic about Netflix and their ability to grow, and like all these other people taking their market share, because there's no one out there that will sign up to 10 different streaming services just to get all the things they want to watch. Like, you don't even have time to watch 5 different streaming services and kind of get like 2 shows in a week. So what I think will happen is a fairly big consolidation, but not soon. Right now, everyone wants to get into the market. No one expects to make money, and everyone just throws money at the problem and hopes that in a few years they will be a major player in the market and will be making a profit. And I don't think that's happening for several reasons, and I don't think that anyone is going to learn the lesson soon. The lesson here being that everyone used to have a cable prescription, and everyone got 900 different TV channels, and no one watches 900 different TV channels. So the cable companies decided to, kind of make you pay for 2 channels at a time, and everything became very expensive, and so now Netflix is cheap. And the funny thing is that you could actually sign up to 20 different streaming services and still be cheaper than your cable bill was before this. Again, ridiculous. However, I think the fracturing market, especially with Disney taking their stuff to their own streaming services, and Apple, I don't even know what they're going to do or buy. I heard that they want to make their own stuff too. Then you have Amazon Prime Video having their own stuff and exclusives and everything, and then, pretty much every cable channel has their own thing online somewhere. And so I think that will make it worse for most other, companies to get into the market. For Netflix itself, I don't think it actually matters much because they were the first. They have the brand recognition. Whenever anyone thinks about streaming, it's Netflix. There's no Hulu and chill. And I think that Netflix is going to be largely unaffected while all the other players are kind of taking market share from each other and not be able to grow because there's just no one out there anymore who doesn't have a streaming service who wants it. So I think that being that there are so many different companies, they all take each other's room for growth and kind of leave Netflix at the top pretty much unaffected. The only other major player, for several reasons, is Amazon Prime Video. And the main reason being that people don't get Amazon Prime Video because they want Amazon Prime Video. They get it as part of Amazon Prime, and somehow they just find themselves with a streaming service that has some actual good stuff on it that they can just watch. So if you already have Amazon Prime and you want a streaming service, obviously you're going to just use Amazon Prime Video. So that's why I think that Amazon Prime is the only real competitor to Netflix, and everyone else is just kind of by the wayside and probably will not exist as a streaming service in 5 to 10 years. So while I don't think that Netflix is going to be majorly affected, and I think that they're going to easily make it through the next recession and probably even grow, I don't like a PE of over 100. And with the revenue growth only increasing 40%, it'll take a good 5 years before the PE is anything resembling normal. And by then we have a whole different landscape of streaming services, internet services, and everything. So I think that if your horizon is very long term, I think Netflix might be something to invest in, but I think that there might also be far better companies, and so I don't recommend this company for anyone but a growth investor with a really long horizon. Dividend investor, obviously out. I don't think that they will be paying a dividend anytime soon. So even 5 years out, I don't expect Netflix to pay a dividend. So dividend investors are out. Value investors with a PE of 107, you will be hard pressed to find a value investor who wants to invest in Netflix. So value investors are out, and growth investors in the near and midterm, I think you're probably also finding better luck elsewhere. But with a long horizon, I think that Netflix is a company that's here to stay, that's here to grow, and that has some enormous potential in the future. So we'll see what happens. I'm not investing in it right now. I'm going to reevaluate in a year and in 2 years and seeing what happens and maybe go from there. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.